one of the things that made gold a better money until it was corrupted by government was the ability to use gold as backing for currency, because that increased the utility of gold when you can store gold in a depository, whether it's a bank or a goldsmith, and issue notes that are redeemable in that gold and which derive their value from that gold, but can then be utilized in commerce instead of gold as a substitute for the gold. So instead of having to go and get my gold and giving it to you, or shave off a little bit of my gold from a bar, we could just have notes, paper, and we could exchange that instead of the gold, because we know the gold's there and we can get it whenever we want. So that was an improvement for gold.
Long-term Bitcoin critic and CEO of Euro-Pacific Capital, Peter Schiff, has projected a global shift from fiat currencies to digital alternatives. Schiff believes that one option that may be adopted by global economies is digital gold, but he remains doubtful about Bitcoin's potential to become one of the digital currencies in the future. He cites the dollar's rapid devaluation as the reason for the shift to digital currencies. Schiff's insights suggest that the financial landscape may be on the verge of significant changes as the world seeks out new ways to manage its wealth. In his recent interview, Peter Schiff highlighted that eventually, I think the world will move away from fiat currencies, and I think a lot of people will start transacting in gold again. I know there are some people out there that think they're going to use Bitcoin. That ain't going to happen. According to a report by Finbold, Peter Schiff believes that the hype surrounding Bitcoin has caused investors to overlook gold. Schiff, who has been a vocal critic of Bitcoin, maintains his pessimistic stance on the cryptocurrency's potential as a reliable digital currency. As a result, he suggests that gold remains a better investment option for those seeking a safe haven. Schiff possessed the strong belief in gold. Recently, he tweeted on his Twitter that Bitcoin buyers may be wrong about Bitcoin, but they're right about the Fed and inflation. Most investors are oblivious to the current financial crisis and the far greater currency and sovereign debt crisis it will ultimately become. It's just too bad holders didn't buy gold. Before proceeding further in this video, please make sure to click on the subscribe button below to stay updated with our latest content.
Could there be a digital store of value that can replace a non-digital store of value, such as, let's say, gold, right? Well, I have to see what actual value is being stored, because when it comes to Bitcoin, I don't see any value there, because I don't see that Bitcoin has any properties that that give it that value. So you can't store what you don't have. I understand all the decentralized part and all that, but I just don't see the value that's unique to Bitcoin when there are so many other decentralized cryptos out there that also have no actual utility or intrinsic value. Yes, people are losing trust in governments and their fiat currencies, but does that mean they're going to put their trust into a digital equivalent of a fiat currency? I mean, yes, the fiat currencies derive their value because the governments have decreed them to be valuable. But ultimately, it's not the government decree that makes fiat currencies valuable. It's the faith that the public has in that decree, right? Because once you lose confidence, it's gone. Look, the Zimbabwe dollar is still the currency of Zimbabwe, and all the government laws making it legal tender doesn't stop it from collapsing. And the same thing with the Reichsmark in the Weimar Republic. It doesn't matter, right? It's once the confidence goes, then the currency is gone, right? It's obliterated. And so Bitcoin, even though it's not, deriving value from a legal tender status, which actually makes it worse than a regular fiat currency, all of its value comes from trust. It comes from trust that other people are going to ascribe value to Bitcoin and are going to want to buy it, right? But what if that doesn't happen? What if people lose faith in Bitcoin? Either because something else better comes along, right? Just like, look at all the problems now. Oh, Google's getting in trouble because maybe people are going to search through Microsoft or, a Bing with their chat, with their AI or, and where did Microsoft come from? I mean, where did Google come from? But because before that, people were using Yahoo or other search engines that already went out of business because something better came along. So you have no idea why people may lose confidence in Bitcoin over the years, or maybe just the whole crypto fad is a fad and everybody loses interest. But here's my whole take on it is I do see value in a digital representation of money that can be more easily utilized in commerce, that could be a better unit of account, a better medium of exchange, right, than a physical bar of gold, right? Just like when we use gold as money originally, and gold has been money for a long time because of how well it works as money and how it's better than other commodities that could also be used as money and have been used in money historically as money. But
in addition to his concerns about Bitcoin, Peter Schiff has made a prediction about the global economy and its potential impact on the already struggling U.S. banking system. Finbold's report indicates that Schiff has issued a warning to investors, urging them to prepare for an even bigger collapse in the country's banking ecosystem. Schiff believes that the current economic climate is heading towards a state of deterioration, which will have severe consequences for the banking sector in the United States. Schiff highlighted in his tweet that it was always inevitable and easily predictable that ZIRP and QE would kindle an inflation fire that would spark a financial crisis when central banks ultimately tried to put out the raging infernos they lit. It was so obvious now comes as a complete surprise to the media.
Well, a lot of banks are in trouble thanks to the reckless monetary policies of central banks around the world, particularly the Federal Reserve, the the European Central Bank, the Bank of England, Bank of Japan. They've kept interest rates at zero or in some cases negative for a decade or so, maybe in more in some cases. They've also greatly expanded their balance sheets through quantitative easing programs where central banks have been artificially manipulating the price of government debt and basically by extension all debt. And so as a result, a lot of these banks are now the owners of longer term government obligations and other obligations like mortgage-backed securities that now in an environment where the Fed has finally decided to allow rates to rise to fight off the inflation that it created. Remember, the inflation that we're experiencing is a direct consequences of the mistakes that these central banks made. So the same mistakes that are responsible for unleashing the inflation are the ones that are responsible for the banks now being insolvent. And so as the central banks are, raising rates to fight inflation, they are exposing these insolvencies because now the value of the bonds that the banks own is dropping. And so when depositors want their money back, it's not there because it's been lost, because the market value of these bonds isn't equal to the deposits. Now, if the depositors are willing to wait 10, 20, 30 years to get their money, maybe they can have it. But they don't want to wait that long. They need their money now, especially since costs are going up. They need more money to pay higher prices. And because there's a way to get yield now, because all these banks, because they've already committed their deposits to these long-term obligations, they're collecting very low interest rates, maybe 1%, 2%. But depositors can take the money and put it in a money market, loaning it to governments, and get in the U.S. they can get 4 or 5%. So it's easy math to do. The banks can't raise rates because they've already committed the money to lower yielding assets. So depositors want their money so they can put it someplace else to get a higher yield, but the banks don't have it. Right? So this is a problem. I was warning about this specific problem as well as many others over a decade ago. I knew what the end game was going to be. I didn't know how long the game was going to be played. I just knew how it was going to end.
In his tweet, Peter Schiff said, Fed adds another $94 billion to its balance sheet in week 2 of bailout. Peter Schiff, a well-known economist, suggests that the current economic crisis is being exacerbated by an increase in banking regulations. According to Schiff, the balance sheet could soon reach a new high, and he believes that interest rate hikes will have little impact. He also predicts that inflation will continue to rise due to the bank bailouts. These insights offer valuable perspectives on the state of the economy and its potential trajectory. According to Peter Schiff, even if the Fed raises interest rates by 1/4 point, don't believe the misdirection. Just like any magician, while Powell is hiking rates prominently with his right hand to pretend he's fighting inflation, behind his back he's creating inflation with QE to bail out the banks.
I've got this 3 3/8 mortgage which is, up for the next 25, 26 years. Bank of America owns that mortgage. They're going to be losing money on that mortgage for 25 years. I mean, they don't want that mortgage anymore. I mean, what good is it? I'm paying them 3 3/8. They could get more than that if they just park their money with the Fed.
Right.
And if they went to sell my mortgage, maybe they'd be able to get 70 cents for it, 65 cents, I don't know. But now they could just take that crappy mortgage and hand it to the Federal Reserve and get back $1, even though it's only worth 70 cents. And that's obviously what's going to happen. And that's why the Fed's balance sheet is going to balloon and why inflation is going up, not down, because they have to print money in order to get a Bank of America out of jail. But, so all the money that all the borrowers are making is a function of what everybody else is losing. And I was pointing this out for 10 years, talking about the other side of the savings. Everybody wanted to focus on how great this was, that everybody could refinance their mortgages at these super low rates. And I kept saying, but what happens to the lenders when rates go up? This is a financial crisis in the making. And of course, now the crisis that I warned about for a decade is upon us.
Schiff highlighted how the U.S. government introduced new banking regulations after the 2008 financial crash while promising what is happening right now would never happen again. The monetary policies penned down by central banks could hurt long-term assets, such as government bonds and mortgages, creating losses for banks. Recently, Peter Schiff pointed out on his Twitter that Powell claims the FDIC has all the bank deposits covered, but who's insuring the FDIC? They're broke. The Fed will have to bail out the FDIC, print money, and inflate the economy. That's all about Today Analysis. Do you agree with Peter Schiff's outlook towards financial crisis and surge in digital assets? Share your thoughts in the comments section below. If you found this information helpful, please consider giving this video a thumbs up and subscribe to our channel. We look forward to bringing you more updates in the future.